finally to get the 14 votes necessary to send the recommendations to Congress on Friday. Read now by David Stockman. He's a former budget director for President Ronald Reagan, a former U.S. Congressman. Mr. Stockman, has there been some progress made on the deficit front because of the discussion that's gone on?
No, I don't think so at all. This was kind of a sideshow. It was a lot of noise. I think there was some earnest effort made by the co-chairman and some of the staff. But the real story is not what they failed to do in a long-term pie-in-the-sky plan. It's what the Congress is going to do next week and the week after as it negotiates with the White House. We're going to extend all the Bush tax cuts, whether we can afford it or not. We're going to extend unemployment insurance, $60 billion. We're going to extend, I think they're going to extend a number of the tax credits that are expiring. The budget's full of things that expire, so the out years look better, but they really don't. We're going to extend the AMT patch, you know, the alternative minimum tax. That's $60 billion itself. Make work, pay credit, $60 billion. What I'm saying is they will enact before Christmas a $350 billion package for next year alone, taking the deficit back to 1.3, 1.4 trillion. Now, in the here and now, that's what Congress is doing. This deficit commission, $4 trillion in the by and by 5, 10 years from now, it's never going to happen. It's irrelevant. There is a complete stalemate between the two parties, and until that stalemate is forcibly broken by a major upheaval in the world bond market, nothing will happen on the deficit, in my judgment.
You're talking about this action is going to take place during the lame duck session. Then, of course, with the new Congress, Republicans are going to retake the House, and basically you're saying there's going to be nothing that's going to be done in terms of tackling deficit or either more tax relief and things of that nature?
Yeah, we've had a 30-year referendum on the budget. The Republicans have finally shown their true colors, to my dismay. There's nothing left in the budget they want to cut, despite all their rhetoric. They don't want to cut Social Security except 40 years from now, you know, for the retirement age. We need to means test it right now in a major way. They haven't cut ag subsidies. They've been on the education bandwagon along with everybody else.
Earmarks too. They talked about no earmarks.
But you know, even then, you know, there's 15 billion of earmarks. We got a $4 trillion budget. Earmarks amount to 15 hours of federal spending a year. So let's get rid of all the earmarks. It's a symbol. Now, the point I'm making is if the Republicans are unwilling to cut any spending that's material, how can they say no tax increases? We need major tax increases, and we're going to have them year after year after year for the next decade. But when they say no tax increases anyway, anyhow, they are basically helping to polarize and stalemate the system. The Democrats are saying no spending cuts, especially for entitlements, and they defend everything else that's there. And now you even have a president who said he was going to make a change, and he's the head of the War Party, and the defense budget is still $800 billion, and I don't see it coming down for the next couple of years. So we are rolling the dice, counting on the Fed to monetize 100% of the deficit. And we're running a short-run risk because this QE2 is basically the big, fat homo bid, as they call it, of the Fed in the market every day buying $8 or $10 billion worth of bonds, and the Treasury is selling 8 or 10 a day on average. Now, what happens when that bid disappears? And the smart guys, the wise guys, start selling the bond because the Fed bid is no longer there. It could start a firestorm of selling in the global bond market, and then we would have the day of reckoning. But until then, the Congress and the White House in Washington, they're in total paralysis, total stalemate, and the problem is only going to fester. There is no easy way out. Once we accept that, then the real problem is to try to start working on this deficit and really make, we're going to have major tax increases.
Tax increases. You said that before, you need higher taxes. Yes?
Much higher. Okay, we're spending 24% of GDP, we're taking in 17. Now, if we could cut the spending back dramatically, that would be one thing, but it's not going to happen. And as a result of that, we need at least 3% of GDP higher tax revenue. That's $500 billion a year. It's going to come right out of the middle income, right out of the upper income. And therefore, the consumer is going to have not only his debt problem to handle, his private debt, but his higher tax problem. And none of the politicians are being leveling with the public. Even the Deficit Commission tried to pretend, you know, minor revenue increase disguised in a huge reduction.
Right, offset some of these taxes.
Well, they said widen the base, close all the tax expenditures and lower the rates. But that isn't the real world. The real world, unfortunately, is year after year after year after year, there's going to be a deficit crisis. There's going to be a scramble by Congress to try to do something about it. There's going to be upheaval in the currency and the bond markets. This is the new reality that we're entering into. Now, there's a lot of delusional people who think we're kind of in a normal recovery, but I don't think the evidence is there.
So we'll talk about that more in a second, but I got to ask, you worked for Ronald Reagan at OMB in the early 80s. Would you be saying the same things if you were at OMB today? And Reagan, of course, he cut taxes and increased spending, and deficits grew under his presidency.
That's true, but we had a clean balance sheet then, and we shouldn't have done it, but we got away with it. When I was walked into the job at OMB, we had $1 trillion of national debt. Today we have $14 trillion. So over the last 30 years, we've taken it up 14 times. The economy's up 4 times, and so our leverage ratio is going out of sight as a macro economy, as a nation.
So just like a hedge fund that's leveraged.
Yeah, we got levered beyond what is prudent, beyond what is sustainable, and as we unwind the leverage, first in the private sector, which we're doing, and then when the world bond market, just like it did Ireland and Greece, makes us unlever the public sector, we're going to be in for a long period of delevering, which means almost no growth in a stagnant economy, which is not an encouraging thought, but I think there's really no way around it when you have a 10 or 20 year party that's paid for with debt, not real productivity.